Hello traders, Greg here with a market update. Okay, so finally we are getting some action in the currency space. The currency space has been pretty dead for a few months, where we've really just seen just choppy range trading, and we haven't really seen any directional moves or breakouts. But that has changed in a big way. We are seeing some huge directional moves and breakouts. Look, it all kicked off pretty much on Friday, and when the Federal Reserve Bank of New York was checking dollar-yen rates on behalf of obviously the Bank of Japan. So dollar-yen was trading above 159 in US trading on Friday, and obviously 160 is a line in the sand, for the Japanese. Now, when you do get the Fed or central banks checking rates, currency rates with banks, that is one step away from physical intervention, and so market basically takes heed of that. And we did see on Friday, on the back of them checking rates, a big sell-off in dollar-yen. So dollar-yen, which was trading, as I said, at 159 plus before they checked rates, and today, Wednesday morning, you've got dollar-yen trading down towards 152, so it's off, a whopping 600 points plus. So that dollar selling, that dollar-yen selling, really is what has initiated broad-based US dollar weakness, pretty much across the board in the currency space. And the market now is firmly, basically short USD and selling USD aggressively. Look, some of the standouts in the last couple of sessions and overnight is Euro has closed and is back trading above 120, first time in a few years. And when it did go through 120, it spiked up all the way up to 120.85 before it closed around that 120.30 area. And also the Aussie dollar, the mighty Aussie, has spiked above 70 cents, first time in a couple of years, and also closed above 70 cents. So some huge moves there in and the currency space, and breaking some big psychological levels. The dollar selling also was aided by some comments made by Trump late in the session in New York last night, where he came out and basically said that he was not concerned with the US dollar decline, and that he thought that the decline wasn't that big, and it was almost as if he was cheering on the US dollar decline. Anyway, when the market saw his comments, they basically hit the US dollar again. So yes, it's something that certainly did help that short US dollar trade overnight. But in any case, look, I would not be fading any of these moves in the currency space, because, look, certainly they are aggressive and the market is in a mood at the moment. If we have a look at precious metals, look, they don't really need any help. Obviously they are in a raging bull market, but obviously the aggressive US dollar selling, commodities inversely priced to the US dollar, so we get US dollar selling, commodities spike up. So yes, precious metals certainly did get some big tailwinds from the basically US dollar selling, and we saw gold new record highs up to 51.90. It added about $170 overnight. That's the biggest one-day gain for gold ever, and obviously, yes, new record high. Absolutely amazing stuff. RBC's came out with a forecast in the last couple of days where they see gold targets as high as 7,000 this year. So a lot of room to run still. Silver, it did not make a new record high overnight, where it traded up to almost 118 the day before, but it certainly did have a record daily close, closing above $112. So Look, those precious metal markets are still absolutely ripping faces off, and anyone who has been long is obviously enjoying this run in a big way. In the commodity space too, crude also did have a decent rally, up almost 3%. It's highest it's been this year, up towards 62.50, and it's right on a big technical downtrend resistance, multi-year trend line. So break there is obviously going to be very positive for that as well. And obviously, traders are still nervous about what may happen with Iran, so that is keeping a premium for crude. So yes, crude is something that is worth probably a cheeky long. Looking, very very good technically, and also getting a tailwind from the US dollar selling as well. Equity space is doing exceptionally well. US equities are back almost up near record highs. So again, with US dollar selling, that is risk on, and that is also helped the equity space. Now we do have some important economic data that comes out in Australia today. That is, we've got the monthly CPI numbers, but more importantly, we've got the quarterly numbers. So quarter 4 CPI. We do have an RBA meeting the first week of Feb that's coming up next week. Obviously, the market is looking for the RBA now to raise rates, and it would need these inflation numbers to come out well below expectations to change that outlook. But look, the market, what they're expecting on the RBA quarterly trimmed mean, and this is the one that the RBA obviously focuses, and the market focuses on the most. Year on year, they're expecting that to go marginally up from 3% to 3.2%. And for the headline CPI number, the quarterly number, the market's looking for that to go from 3.2 up to 3.6%. So these are not good numbers if they come out as expected, and no doubt will confirm that rate hike from the RBA. So obviously the Aussie, which is doing exceptionally well at the moment, it's above 70 cents. This obviously will help the Aussie again, so we could see the Aussie go up towards 70.50 plus. Now the resistance for Aussie, really monthly resistance a couple of years ago is at 71.50, so it certainly does have some blue sky topside. So yes, staying along Aussie obviously is something that is working, and looks like it will continue to work today. After the RBA, we do also have in the States the first FOMC meeting of this year. Look, the market doesn't expect the Fed to cut rates at this meeting, but obviously the press conference is something that is going to be a big focus for the markets, and market will be interested to hear from Powell to see what his thoughts are on the neutral rate, whether or not the Fed still has room to cut, to go down more to find that neutral rate. If obviously he does say something along those lines, then market will view that as dovish, and that certainly we'll get some more rate cuts this year, probably towards July and in the third quarter of this year. But certainly, if we do get Powell giving some sort of dovish hints that we haven't hit the neutral rate yet, again, we probably will see another wave of US dollar selling, and obviously risk on in the equity space. So yes, tonight we do have a risk event. Anyway, look, a lot going on in these markets at the moment. Some huge ranges in not just currencies, precious metals, and obviously some big directional moves. So trend is your friend. I would be sticking to that. And good luck with your trades, and we will check back with you shortly.